What's going on, guys? Welcome back, and in this video I'm going to be giving a new stock analysis on Micron for 2019 and breaking down what exactly you can expect from the company, where does the company stand in the overall scheme of things, and exactly what are my opinions on the company moving forward over the next couple of months. So in this video I'm going to be going down exactly where Micron fits in their overall market, and then also what other markets are affecting Micron and can affect Micron in the future. So if you're interested in any of that, make sure to stick around, like this video, hit that subscribe button, hit the bell notification, and let's get in the video. So giving a quick overview of what Micron is and what exactly the company does, you can think of the company as one of the world's largest computer manufacturers. So they create computer components for whether it be a desktop, a laptop, phones, or say servers in a large data center. They create some of the most vital components for the end product that are going to be utilized in any of these spaces. Now, so Micron only focuses on DRAM and NAND, so you can essentially think of that as your RAM in a computer, or say your solid state drives in your computer. So you can essentially have your memory and your storage are products that may or may not be made by a company like Micron. Now, these type of computer components are generally viewed as commodities, and that's largely due to the fact that unlike, say, an individual CPU or an individual GPU, they are products that realistically are equivalent regardless of who you buy them from. So for example, if you buy 8 gigs of RAM from Micron, they're going to be almost identical, if not actually identical, to 8 gigs of RAM, say, bought from Samsung or SK Hynix. So when you look at the overall market share, you can pretty much look at how these companies have been doing as far as acquiring market share, even though they do not necessarily have that customer loyalty over the past couple of years. So right here, I list from 2011 to 2018 the individual market shares of each of the main 3 competitors in this space and what they've done. So if you look at Samsung in 2011 had about 40% of the overall market, and now they've expanded their overall market share to 45.5%, yielding them about a 5.6% gain in the overall market share. Then you look at SK Hynix, they started off with 22.9%, and now they have expanded that to 29.1%. Giving them a 6.2% expansion of the overall market share. And then you look at Micron, and Micron started off only having 11.4% of the overall market share, but now they have really aggressively expanded, and now they have had 21.1% of the overall market share, meaning that over the past 7 years, they have gained almost 10% of the overall memory market share. So you can definitely see that Micron is, going in the right direction as far as seizing market share away from their competitors. You can also tell if you look at any graph of what are the main memory players in this space that it has been dwindling down over the past couple of years, and realistically, the majority of the market is now just held between these 3 companies. That's largely due to smaller companies either going bankrupt or being bought out by these larger companies. And also the fact that when you generally go for contracts like these type of modules, they're generally done in big bulks, and generally whenever you get one company's contract, that generally stands for over a couple of years. So for example, if you're a large IT firm and you create a contract with Micron or with Samsung in order to supply your memory, generally as long as that contract exists, you're going to be continuing to buy your memory from these companies in bulk, which really kind of allow, the companies that currently have the contracts, that are currently, using those relationships with their customers, they're generally going to be the ones that they go back to in the next coming, say, cycle, assuming that their price per gigabyte ratio is roughly the same as their overall competitors. So now this kind of goes down into what exactly affects Micron in the semiconductor space, and I'm going to be talking about really what companies Micron relies on heavily in order to really, see their growth continue over the next couple of years, and what makes people go back to Micron to buy more and more RAM modules and SSDs. So running down the list, the main semiconductors that have a direct play and a direct effect on Micron are going to be Intel, creating CPUs, AMD creating GPUs and CPUs, and then NVIDIA that is just creating GPUs. Technology companies that are also going to directly affect Micron's performance are going to be Apple, Microsoft, Google, Facebook, and Amazon. And all these companies are either in 1 and or 2 buckets, and they generally focus on data centers or consumer tech that individual people are going to be buying. So for example, if you're buying a laptop, whether it be a Mac or a PC, you're going to directly contribute to a device that is going to be utilizing RAM that will help Micron, or all these companies such as Amazon and Facebook and other companies that have massive data centers. All of those data centers are going to be using a lot of RAM, and every time that they expand their data centers, they're going to be needing more and more RAM in order to compensate for their growth in that type of market. Now, I've talked about it many times on this channel that, going back a couple of quarters, when Intel started to say that there were going to be a lot of demand issues and they were not going to be able to have a lot of supply in order to meet that demand, AMD attempted to step up to the plate, but AMD is not able to, produce CPUs in the vast quantity that people need, that, just to be that Intel substitute. So if there are any, complications with creating these CPUs or really getting them out to market, it's going to be a direct negative impact on Micron, because if these CPUs are not able to go out, not many people are going to be needing these DRAM modules, in the foreseeable future. And it's just kind of a, trickle down thing that really goes down to that if one component in, say, the scheme of a computer does not really, come up to fruition and people do not see that need to upgrade, then all the other computer components are going to suffer because of it. Now, so why exactly, when I talk about this, does it matter if Intel isn't coming out with their CPUs? Why does that actually matter to Micron? Why can't people just continue to buy RAM modules? It's not the same semiconductor. What's the main reason? And the main reasoning of that is because of the basics of making a computer. Now, I know a lot of you guys aren't super tech savvy, or you're just dabbling in tech computer companies, and so that way you see that they're explosive growth, or you see that they have potential for growing in the future. So you pretty much look at the fundamentals, you look at what the company's doing, and then you expect, if everything looks good from an individual company standpoint, that the company will perform well over the long period of time. And I'm here to say that unless everybody in this sector is running on all cylinders, it's going to be a really difficult year for the other companies, and that is largely due to this layout. So when you go to build a computer, you essentially have a couple of main components that you need to have in order to build your computer. You're going to need your CPU that will be provided by either Intel or AMD largely. You need your GPU that'll either be from NVIDIA or AMD. You need a motherboard in order to support that CPU. And then you're going to be buying your RAM, your storage, and then your power supply. And essentially, after all of that, you have the bare bones of a computer. However, when we look at how these individual components affect one another, you can kind of see the reasoning as to why whenever Intel is having a large issue or AMD is having a large issue, I definitely think that that's going to directly affect Micron. And that's why, as of Intel coming out with saying that they're going to be pushing back their CPU again, I became more and more bearish on this overall environment. So when you're someone that, say, is going to be in the market of either buying a computer, whether it be for personal use, or say a company creating their data center computers in order to support their infrastructure, you pretty much have a couple of components that really decide the need of the upgrade and also the type of build that you're going to be getting. And those two are generally the CPU and the GPU, because these are the main powerhouses of a computer. They're generally the most expensive components, and they're also the ones that decide the overall build quality or build purpose for that individual build. So whether you are going GPU or CPU heavy, that could be, if you're building a gaming computer, you're going to be focused more so on your GPU than your CPU. And if you're building, say, a workstation, you're generally more focused on the CPU. Now, the CPU is going to be directly tied to the motherboard, because individual motherboards can only support individual CPU sockets. And depending on your combination, you're going to either be bottlenecked, or you're going to have ample room to expand your RAM consumption. For example, some motherboards only support certain types of RAMs. So say if you're building a computer and you pick out your CPU and then you pick out your motherboard accordingly, you are now restricted to what type of RAM you can actually buy, whether that be DDR3, DDR4, and then you're also going to be restricted on how much RAM you can actually put in that system. Depending on the motherboard and depending on the CPU, you eventually hit a point where you can no longer fit any more modules onto your board. So it's not something that, okay, I have a computer that's 4 years old, and I had 16 or 32 gigs of RAM then, but now the latest motherboards are coming out and supporting 64 to 128 gigs of RAM, so I can then just immediately put that much RAM into my motherboard. That is not the case. So now, if you do not have this individual coupling, the end user's computer is going to eventually be bottlenecked by the amount of RAM that they can use. So what that translates to is essentially, if you do not have the ability to upgrade their CPU, and assuming that these companies, that they're buying their workstations and, they're pretty much speccing them out to all hell so that way they have the best performing computer at that given point in time, they probably bought as much RAM as supported for that individual system. So if a company does not have the ability to, say, change their CPU server chips or anything like that, there's going to be no need for these companies to go out and buy more RAM, because feasibly they are already using as much RAM as they can possibly use in these systems. So that's why I think it's safe to say that if Intel or AMD are having issues, meeting supply and demand, then Micron is going to be immediately affected by that, because if you are not creating these, CPUs in order for people to create these new workstations or these new servers, you are not going to need that RAM, that excess RAM, because there's no need to build the computer. Because essentially, the main components that are going to decide whether the person upgrades or changes their computer is going to be based around the CPU or the GPU. The GPU is able to, kind of plug and play into whatever system that is, but if the CPU does not get upgraded, your RAM feasibly is not going to be upgraded either. So that's kind of the overall layout, at least the way that I see it from a, computer building standpoint of, when you have supply and demand of a certain group of semiconductors but not another, it's still going to adversely affect other groups of semiconductors, and that's largely just to do with the nature of building a computer, because essentially, you can't just have one component and call it a computer. You need all of them to come and work together if you're going to ever have a consumer that's going to justify, upgrading, building a new computer, or even upgrading the computers and, replacing them with, better computers in the foreseeable future. So that's something that I definitely see is going to be a direct tie in comparison of how Micron's going to be doing in the future. And that's something that I've talked about many times here in this channel. But I've gotten a lot of questions on, why exactly do I think that because issues are going on at Intel, issues are going to be happening with Micron. And I really wanted to just explain that, because that way it will also allow you to really understand what's going on. Whether one company comes out with good news or one company comes out with bad news, you'll kind of see how they're going to relate to one another in the next couple of quarters. This type of a mindset, in my opinion, gives you a slight bit of an edge to people that are just looking at balance sheets and individual quarter-by-quarter basis for these companies, because not many people are, looking out, okay, the building blocks of, okay, if this is going to happen and this is happening with this company, what does that really mean as far as, as the domino effect, what does that mean in the future for these types of companies? So when I talked about, say Intel not being able to meet demand, and then I said that I was bullish on AMD, that AMD was going to be able to seize some market share, I was able to position myself accordingly and, reap that benefit of, that transition in the semiconductor space. But now with Intel, coming out and again saying that, okay, we can't meet that, we're going to have to push back our expected date, and that AMD wasn't able to really, ramp up production in order to meet that demand, I then said I'm pulling out of AMD, as I did accordingly, and that Intel was probably going to then take that market share that everybody thought was going to be going to AMD, in the next cycle. We'll see what happens with that. But as you saw, AMD's, kind of stock price ran away from itself and came back down. And as I was also talking about in that when Intel came out with their earnings review and Micron talked about, a consumer, really bottlenecking their entire industry and their demand, it all plays a factor and all directly ties to one another. So in my opinion, if you're going to be invested in semiconductors, you really need to focus on, okay, how does a computer work? And then how do each components affect one another? Now, jumping into Micron's balance sheet, because as we all know, the balance sheet is essentially, what does the company have to work with? What does the company owe? And then what are the financial standings for the company at any given point in time? As of their last earnings report, Micron currently has about $15 billion in cash, and, their total assets stand at about $44 billion. It should be noted that their net property and equipment makes up about $24 billion of that total assets, and that these assets or these, say, equipment that the company is currently using are going to depreciate at a very alarming rate. And when you look at it compared to other companies, you're confused with why their depreciation is so high and so quick. And that's largely due to the fact that eventually, once Micron starts to switch to a different method of making RAM, say if we ever go to the DDR5 standard, all this technology is going to pretty much be useless when they're now making their new modules. Yes, they're going to be used for any point in time that DDR4 is going to continue to bot, as we saw that with DDR3. Obviously, they're still going to be producing DDR3 or DDR4 and DDR3 and DDR5 whenever the latest, cycle comes out. But where the money lies is going to be in all the high-end cutting technology. So a lot of this tech is going to be considered useless, 3 to 5 years out. And so that's why it's such an important factor in all these manufacturing companies, especially in the CPU space, that this equipment isn't going to, stand the test of time. And so the company is going to need to, stockpile cash as they've been doing, which I'm glad to see, for whenever that next cycle happens. They're going to need to dump a lot of money in CapEx in order to kind of meet demand for the new module. Now, if you look at the company's liabilities, as of right now, it seems reasonably manageable, with the company only having short-term liabilities of about $5 billion and then total liabilities at just under $11 billion. With having $15 billion in cash, that means that the company doesn't feasibly have to worry about these current liabilities or their outstanding debt. They're going to pay it off with cash if they want to, and that still leaves them some money to really catapult their CapEx whenever they need to make the transition to DDR5. So from a balance sheet standpoint, the company looks pretty great. However, that is not really the only thing you need to be looking at in a company like Micron. So now I'm going to be talking about something that I've brought up many times here on this channel, and that is the role technology plays in the economic cycle. Now, as you can see from this chart, it's from a Fidelity textbook, I believe in the late 90s or the early 2000s, but it realistically still stands true to today, and that is technology is used generally at the recovery stage of an economic cycle through the bull market stage of the economic cycle, but it kind of gets shafted once you start to hit economic downturns. That's largely due to the fact that technology in its economic role is pretty much used to expand GDP capacity and allows things that are no longer as efficient to become more efficient, and allows us to squeeze more out of our individual capital that we expend or our individual labor. Because you essentially, you will eventually hit a bottleneck of labor, as we are right now. Unemployment rate is at an extremely low rate. So that means that all of the capital that we feasibly can use is now being utilized. So the only other way that we can say increase our GDP is technology. But eventually technology, kind of as we've been seeing in the last, kind of market cycle and how people are responding to new technological devices, there's no real innovation and there's no real need to upgrade as of right now. So you start to see this trickle-down effect of, okay, well, now we're not able to get any more production out of our new technology, and we're already using all of our labor that we can possibly use. So is there any more upside left in here potentially? So that's just kind of my opinion of, kind of looking at the economic cycle and where we are and how technology is going to be playing a role in that. I personally think that, we are nearing the top, if not already hit the top of our current economic cycle. And I think that from here through the next phase of our economic cycle, it's not going to be the best type of situation for most technology and or semiconductor companies, because eventually we're just going to start to have the compressionary period for GDP, and if your GDP is not expanding, people are going to immediately start cutting technology. So taking that all in mind, my key takeaways from this presentation are that semiconductor companies essentially exacerbate what the overall economic cycle is currently doing. So we've seen this time and time again, and that if you invested in any of the semiconductor companies at the beginning of, say, the bull market, and you pretty much held on to them throughout this bull run, you had immense returns that greatly outperformed the overall market. However, if you backtrack how any of these companies performed during an economic downturn, even just a growth slowdown, they drastically underperformed the overall market. And that's largely due to the fact that, people are no longer spending money on, getting the most out of their dollar when they don't have that dollar anymore. So in my opinion, since we are nearing the economic cycle, technology and semiconductors are going to be taking a massive hit essentially once we pass this tipping point. So right now, we essentially are at a stalemate, and that people don't know if the economy is going to go into free fall or if the economy is going to recover and then reach all-time highs. I am personally a little bit more skeptical and bearish in the fact that I think that we are, nearing the end of this bull run. We might have another leg or two up, but, the majority of our gains are behind us. So I would say that right now it is a more dangerous time to go long in semiconductors than it has been before. However, when you look at the fundamentals of Micron and you look at, say, their individual financial ratios, right now they're trading near book value, so that is essentially what the company currently owns. And due to this massive slowdown is essentially why the company went from having over a 3 at one point in time book value to now under a 1. And so you can kind of see that that is already being priced in by the market to seeing like, okay, a downturn is coming, and people are adjusting their position in Micron accordingly. You can also currently look at Micron's amazing free cash flows. The company at some points in time were doing $15 billion, in net cash flow. But essentially, when you look at that, that is from a bull market standpoint. The second you turn into an economic downturn, that free cash flow can become near existent or even negative, with the company still having to pay their liabilities and no real revenue coming in the door. So that's something you definitely need to take in mind when you're looking at Micron over a long-term perspective. On the plus side, Micron is currently looking at this, and they are paying down their debt aggressively while they do have this massive free cash flow. It's definitely better than, a company just dumping all of their free cash flow from a cyclical nature company, dumping all of that free cash flow into, just growing out the business, while it's only expected that, their free cash flow is going to diminish over time. So I do like the defensive route that the management is currently taking with their free cash flow, but that doesn't mean that the company is out of the woods yet. Another big thing to keep in mind is that the company is implementing a $10 billion share buyback, and as of their last earnings report, they said that they're done with about $1.8 billion of it, so that's roughly 18% of their total share buyback has happened. And I personally hope that the company was able to buy a lot of their shares and aggressively use that share buyback when the share price briefly dipped below book value. As you guys all know, that I bought a little bit more of Micron during that. I said that I was waiting for it, and it happened. And since then, buying it at, say, I think it was at $28.50 was around when it dipped below book value. You're already up close to 30% just off of that. However, I do not think that Micron is going to be, say, impervious to dipping below book value at an even larger scale. I would not be surprised if Micron eventually is trading at 0.6 of a book value, because if you look at the past memory cycles, when we hit a trough of this technology slowdown, they have been trading at a discount to their book value, and then this is regardless of what happens with an overall economic downturn. So the economy was still going strong when we had our last couple of memory market cycles. But so if you couple the fact that Micron can trade below 0.6 and a 0.8 book value, if memory demand is weak and the overall economy is doing well, if memory demand becomes weak and we have an economic recession, there's a very far way that Micron can go until it kind of hits a floor, because you can already expect that people that trade in the short term or people that are investing, and they don't want to take any risk at all. You essentially have a company that will only prosper if the economy is doing well and technology is doing well. You have a lot of reasons that the economy could drive down the stock price to, unrealistic, in my opinion, levels, trading at, say, 0.4 of a book value. I don't know if it'll get down to that point, but that is definitely something that could happen, and it should be taken in consideration when you're doing your investment strategy on Micron. Now, personally, if we get down to that low of a share price, I'm going to be aggressively buying Micron because I believe that Micron, in the next, say, memory cycle and in the next market cycle will outperform its competitors and will outperform a lot of the semiconductor companies in that space. But you have to keep in mind that these cycles are going to directly affect the share price. So that was just a quick updated overview on Micron and how I essentially look at the company as a whole. Let me know if you guys want a more detailed analysis on any of these points, and let me know if this actually helped you guys out. I know a lot of you guys talk to me about how you love Micron and you look at their financials and it looks amazing and it's too cheap to pass up, but this is kind of my way of putting in some context as to why Micron is currently trading at a quote-unquote discount and what could happen, in the future if either other companies in the semiconductor space do not, they're not up to snuff and they're, kind of dragging down the overall sector, or what happens if we actually hit an economic downturn. What does that actually mean for the company? So hope you guys got some use out of this. Let me know what you guys think in the comment section down below, and I will catch you guys in the next video. Peace.